Good day Forex trader. Your USD Forex Signal, cautiously optimistic ahead of ECB decision. There is a likelihood that the pair will likely hold steady ahead of the ECB and then have a pullback on profit taking. Bullish view. Buy the Euro USD pair and set a take profit at 1.1350. Add a stop loss at 1.1250. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.1290 and a take profit at 1.1240. Add a stop loss at 1.1350. The Euro USD pair continued its bullish trend as investors waited for the upcoming interest rate decision by the European Central Bank, ECB. The pair is trading at about 1.1300, which is significantly higher than last week's low of 1.1120. ECB decision. The Euro USD price has been in a bullish trend in the past few days as investors reflect on strong economic data from the European Union and the upcoming interest rate decision by the ECB. On Monday, Eurostat published strong GDP numbers from the region. The data showed that the bloc's economy expanded sharply in the fourth quarter. This recovery was a comeback considering that it retreated in the previous quarter. Further data from the EU showed that the labor market has made recovery even as the Omicron variant continues to pose substantial challenges. The unemployment rate from the region declined to an all-time low of 7% even as travel remains constrained. On Tuesday, data by market showed that the manufacturing PMI held steady above 50 in January as supply chain issues started to ease. Finally, and most importantly, on Wednesday, data by Eurostat revealed that the bloc's inflation jumped to 5.1% in January. It is against this backdrop that the ECB will conclude its meeting later today. With the economy rebounding, there is a likelihood that Christine Lagarde will deliver a hawkish statement even as she leaves the current policy framework intact. Some analysts expect that the ECB chair will signal that it will end the quantitative easing policy later this year. The Euro USD also held steady after the latest jobs numbers by ADP. The data revealed that the private sector in the US lost more than 300,000 jobs in January even as the number of job openings remained at elevated levels. Euro USD forecast. The 4-hour chart shows that the Euro USD pair continued with its bullish trend ahead of the ECB decision and the upcoming US non-farm payrolls, NFP, data. It is attempting to move above the Ichimoku cloud. Additionally, the pair has moved above the 25-day and 50-day moving averages. The two lines are even attempting to make a crossover. It is slightly below the 50% Fibonacci retracement level. Therefore, there is a likelihood that the pair will likely hold steady ahead of the ECB and then have a pullback on profit taking. The key support and resistance levels are at 1.1250 and 1.1350. GBP USD Forex Signal, downside likely after BO decision. Since a rate hike has already been priced in, there is a likelihood that the pair will have a pullback after the decision. Bullish view. Buy the GBP USD pair and set a take profit at 1.3500. Add a stop loss at 1.3650. Timeline, 1 to 2 days. Bullish view. Set a sell stop at 1.3550 and a take profit at 1.3500. Add a stop loss at 1.3600. The GBP USD pair continued its bullish trend as the market readjusted to the upcoming interest rate decision by the Bank of England, BO. The pair rose to a multi-week high of 1.3588, which was about 1.52% above the lowest point this year. BO interest rate decision. The British pound has been in a strong bullish trend in the past few days ahead of the upcoming rate decision. Economists expect that the BO will once again increase interest rates by another 25 basis points as the economy continued to recover. If the bank increases rates on Thursday, it will be its first time of doing so in about 17 years. The bank surprised investors by implementing its first rate hike in December. A lot has come out since the bank made that decision. For example, Data published in January showed that the country's inflation jumped to the highest level in 30 years in December. This performance was due to rising energy costs, something that the bank cannot solve. Data published this year also showed that the UK unemployment rate has dropped substantially in the past few months. It was at 3.9% in November, which was the lowest level since the pandemic started. Further, the housing market has gotten red hot and there is a likelihood that the trend will continue barring any further rate hikes. On Tuesday, data by the Nationwide Society showed that the country's home price index jumped sharply in January. The number of people seeking mortgages has also done well. Therefore, the GBP-USD pair has risen because investors are waiting for a 25 basis points rate hike on Thursday. Some analysts believe that Andrew Bailey will surprise by implementing a 0.5% hike. GBP-USD forecast. On the 4-hour chart, we note that the GBP-USD pair has been in a strong bullish trend in the past few weeks. Along the way, the pair has moved between the 23.6% and 38.2% Fibonacci retracement levels. The pair has also moved above the Ichimoku cloud and the 25-day moving average. The GBP-USD pair has moved above the first resistance of the Woody pivot point and the first support of the Andrews pitchfork tool. Therefore, the outlook for the pair is bullish ahead of the Bow decision. However, since a rate hike has already been priced in, there is a likelihood that the pair will have a pullback after the decision. Aud Usd Forex Signal, extremely bullish above 0.7150. The pair will likely keep rising as bulls target the next key resistance level at 0.7200. Bullish view. Buy the Aud USD pair and set a take profit at 0.7200. Add a stop loss at 0.7060. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7100 and a take profit at 0.7050. Add a stop loss at 0.7150. The AUD-USD price rally faded even after some hawkish comments by Philip Lowe, the Reserve Bank of Australia, RBA, governor. It is trading at 0.7130, which is about 2.35% above the lowest level in January. On Tuesday, the AUD-USD pair rallied after the RBA concluded its two-day meeting. The bank surprised many watchers after it decided to end its quantitative easing policy. It also reiterated that it will only hike interest rates once real inflation moves between 2% and 3%. In a speech at the National Press Club of Australia, Philip Lowe said that rates could lift off later this year if the economy continued its recovery. This was the first time that the RBA chair acknowledged about such a scenario. In the past meetings, the RBA had hinted that the first hike will happen in 2024. In the statement, the bank said that rate hikes will depend on how quickly the supply chain issues are resolved and how quickly the labor market strengthens. Data published recently showed that the unemployment rate has fallen while the closely watched wage price index crossed the 3% milestone. The next major catalyst for the AUD-USD pair will be the latest jobs numbers from the US. On Wednesday, data by ADP revealed that the US private sector shed about 30,000 jobs in January. This happened even as the Great Resignation continued and the number of vacancies surged. Later on Thursday, the Bureau of Labor Statistics will publish the latest initial jobless claims numbers. After weeks of rising, analysts expect that the claims declined to 245,000 last week from the previous 260,000. On Friday, the US will publish the latest non-farm payrolls, NFP, data. Analysts expect that the unemployment rate declined again to about 3.8%. AUD-USD forecast. The AUD-USD pair has been in a bullish trend in the past few days. Along the way, the pair has managed to move slightly above the first resistance of the Woody pivot point. It also rose above the 25-day moving average and the key support level at 0.7083. It has also just entered the Ichimoku cloud. Therefore, the pair will likely keep rising as bulls target the next key resistance level at 0.7200. On the flip side, a drop below 0.7083 will invalidate this view.